Good afternoon, everyone. Thank you so much for joining me today. In today's session, we'll be going through how you can invest in US stocks and ETFs using the Hisa app. But before we get started, kindly confirm that you can hear me. Kindly confirm, maybe put a thumbs up or just comment in the comment section. Stacy, thank you. Karanja, thank you so much. Awesome. So you can hear me. Uh, good afternoon once again. Thank you so much, Gideon. Good afternoon. My name is Gertrude, and if this is the first session you are joining us, my name is Gertrude, and I am the community manager here at Hisa. And in today's session, as I have said, we are going to be going through how you can invest in US stocks using the Hisa app. Right? Um, kindly allow me to admit some of these people who are still joining us. Thank you so much for confirming that you can hear me. And yeah, I believe we can get started, right? Eric is saying check your audio. Can everyone else hear me? Can everyone else hear me? Kibe Esther, awesome. Okay. It seems that everyone else can hear me. Eric, maybe it's an issue on your end. Oh, Tom, awesome. Awesome. Okay. I'm glad that you can hear me, and let's just get started. So today we'll be going through what are shares. We'll be going through the US stock market. What is the US stock market? When you hear someone saying they are investing through the US stock market, what does this mean? How to invest in US stocks? Yes, I'll be demonstrating step by step. How do you buy? How do you sell? What are the requirements that are needed so that you can access this market? What is the minimum amount that you can use to invest in US stocks on the Hisa app? How to place a buy and sell order, will be demonstrating that as well. And finally, we'll have a Q&A session whereby if you have any question you would like me to explain further, you can just leave a question in the comment section below and I'll be happy to answer your questions. So feel free to leave your questions in the comment section below, and during the Q&A session of this section of this session, I'll be happy to answer your questions. Finally, we'll also go through how you can contact Hisa customer support, and finally, what we covered in the last few weeks. Yes, we have been having these sessions, training sessions, for the past month. So if you've missed any of our sessions, don't worry, I'll share with you how you can get the recordings of the previous sessions and also a recording of this particular session. All right? Okay. So first things first, we need to start with the basics. What is a share? When you buy shares of a company, what does this mean? Well, let's define what a share is. A share is simply a unit of ownership in a company. What does this mean? This means that when you are buying shares or stocks, you are buying a small piece of that company, a small piece of the pie. So when you buy shares of a listed company, you become part owner of that company. When you buy shares, we say you have become a shareholder of that company. And as an owner of that company, you are entitled to some benefits. Today, we'll be looking at two benefits that you as an owner get an owner of that company get. The first one is you can get part of the profits made in that specific company. Yes, you are entitled to the profits of that company. Is this a must? No, but to persuade people to invest in these companies, most companies share part of their profits with investors, and this is what we call dividends. So, number one, you can get part of the profits that that company makes. Number two, you can gain from capital appreciation. And what is capital appreciation? In simple terms, capital appreciation is whereby you buy shares of a company at a low price and wait for them to increase in price. Once you buy low, you can sell high. For example, you might buy a stock of a company. Let's take, for example, Apple stock. You might buy it at $233 per share, and once that company reaches a share price of 250, you might choose to sell, and that is what we call capital appreciation, that movement, 233 to 250. All right, there we have it, the two benefits of becoming an owner of a publicly listed company. And the same way we have benefits, we must have some downfalls. And one specific risk of becoming a shareholder of a company that is listed is that, one, the prices of these companies go up and down, fluctuates. So you might buy at $233 per share and sell at 250, and then the next week you might choose to increase that amount. You buy new shares at 250, and then a few days later the stock goes back to 230 or even 220, and that is the reality of the stock market. So when you see this, don't panic. This is something that happens often. So before you invest or buy shares or stocks of any company, make sure that, one, you have done your research and you are ready to for the ups and downs of these markets. Okay, all right, so there we have it, the benefits, dividends, capital appreciation, the downfall, the stock prices fluctuate. Okay, right, as we have said, feel free to leave your questions in the comment section. I'll cover them in the Q&A section. Okay, all right. So the US stock market. What is the US stock market? In layman's language, a stock market is a collection of exchanges through which shares of a publicly listed company is issued, bought, and sold. Issued: a company wants to raise capital. They say, we have 4 million shares and we'd like you to buy. Issued: through the stock market, you are able to buy and sell those shares. Okay, and we said a stock market is a collection of exchanges, and we'll see a few examples of some exchanges in the US stock market. So the stock market allows companies to raise money by offering stocks or shares. It also allows you, the investor, to participate in the financial achievements of the companies. You are able to make profit using the ways that we discussed: capital gains and earning dividends. So the company is able to raise money so that it can expand its operations, and you, the investor, get something back. You get dividends as well as capital gains when that market performs well in the stock market. So the two most common or biggest exchanges in the US stock market is the New York Stock Exchange and NASDAQ. And the best thing is that you can access the companies listed in these two exchanges, that is the New York Stock Exchange and the Nasdaq, through the Hisa app. Now, in total, there are around 12 stock exchanges in the US stock market, including the Amex, which primarily deals with ETFs. Okay, that's it about the US stock market. It is a collection of different exchanges. The two most the two biggest exchanges, the New York Stock Exchange and the Nasdaq. All right? Okay. So before we get to how to invest in US stocks in Kenya, as we said, the purpose of this video is to demonstrate how you can invest in the US stock market through the Hisa app. Now, the first thing that you need is to get an account on Hisa that is verified. So download the Hisa app. If you have not, you can find a copy of the Hisa app on App Store or Play Store. Then create an account, right? Remember to share your physical details. Okay, we'll watch how you can create an account right here.
An account, key in your information. Tap on create an account, key in your information, that is your first name, your last name, then choose a username. It can be a combination of your first and last name or any word. Key in your email, your active email, and tap agree to the terms and conditions, then tap register.
All right, there we have it. In very easy steps, you will be able to have an account on Hisa. So download the app and follow the prompts. Okay, once your account is verified, you are in a position to start buying your stocks. So you'll need to upload these documents: your ID, that is the front and back image of your ID, a passport size photo of yourself, and your KRA pin for the Kenyans in the house. Okay, just that. Download the app, follow the prompts. You'll be prompted to key in your details and then upload your documents. And one thing that most new users are forgetting is to share their physical address details. And once you fail to
Tap on the profile.
Once you fail to key in your physical address information, you will get this error whenever you try to buy US stocks. Note this error is specific for US stocks. So in case you see this error, just know the information that is missing is your physical address information, and this includes the street, the estate, your city, province, postal code, and the country you are in. Okay, so let's see how you can add your physical address information. Right? Okay. So yes,
Icon at the top right hand side, tap on investment account, tap on residential address and fill out the necessary information, then tap submit.
So there you have it. So you'll need
Tap
to
on the
first log in to your account, then tap the profile icon. It should be at the top right hand side, this one right here. This will take you to a new page.
right hand side.
Once you are on the new page, just tap on the investment account.
Tap on investment account. Tap on
Then on the new page, just scroll down, you'll see the residential address. Residential address.
residential address and fill out the necessary information, then tap submit.
Yeah, just that. So whenever you find this error, just know that your physical address information is missing, and that is what is required. From there, you will be in a position to start investing. So what is the minimum amount you can use to invest in US stocks on Hisa? Well, in general, the minimum is just 1 USD. Now, we can see an array of US stocks. Let's play a game. If you know the names of these stocks, unmute your mic, and yeah. So the first one is, if you know the stock, the first icon, this blue one. If you know the name, Dixon says Meta. Yes, yes. Meta is the parent company of Facebook. So if you use Facebook, this is your chance to own a piece of it. Okay, Stacy is so quick. She has listed all of them. So Stacy is saying the first one is Meta. The second one, the A, is Amazon. The third one is Microsoft. Then Apple. Awesome. Edwin, Alphabet. Awesome, awesome. I can see we are an interactive group, and I like that. Thank you so much. So Alphabet owns Google. So the thing is, you can see the share prices of each individual stock. For Meta, aka Facebook, we have 593.25, $593. Amazon 190, for 30. You can see all of that. The best part is that on the Hisa app, you are able to buy fractions of that company. So, for example, let's say you have 200 USD and you want to buy Meta. Yes, that is possible. You can buy. You don't need the whole amount to buy a share. So this is what we call fractional shares. You are able to buy a small portion of one whole company. Therefore, you will get a fraction, a 0 point or 0 point or 1 point something of that company. As we've said, the minimum that you can invest in US stocks on Hisa is 1 USD only. So as long as you have your 130 shillings, you can buy a piece of your favorite companies on the app. So I wanted us to take real life examples, and yeah, the current price for the iPhone 16 Pro Max is 1,199 USD versus the Apple stock, which at the time I was compiling this presentation, the stock price was $233.67. So one iPhone, the price of one iPhone can get you 5 Apple stocks. Yes, 5 Apple stocks. So And the best part is that Apple pays quarterly dividends, although there's someone who said that if you want dividends, just invest in the Kenyan stock market, but if you want capital appreciation, invest in the US stock market, which I agree, but oh well. So with Hisa, you can get to own the brands that you love and evolve from being just a consumer. You can be part owner of that company, such that, for example, when Apple makes money from issuing new phones, you can get a piece of that profit made. So yes, it's fine to consume, but as a savvy investor, it is good to own pieces of those companies that you use. All right, that is one way of building wealth. Okay, all right. So
Tap on US stocks.
now we have come to the demonstration part, how to buy US stocks on the Hisa app. So once your account is verified, you have uploaded the documents that we spoke about, you can place your first order. All right, so how do you do this? Let's watch the demonstration. So how to buy US stocks on the Hisa app.
Tap on US stocks. Tap on all stocks. Then search for the stock that you want. This time we'll search for Nvidia. Search and tap on it. On the new page, you can see the performance of the company, some company information, and so on. Then tap buy. This will take you to a new page whereby you'll be able to key in the number of shares that you want or the amount that you want to invest. In this case, we'll go with 1 USD, which is the minimum on the Hisa app. Type the amount 1 USD and that's it. Tap buy. You can see the breakdown of the order amount, transaction charges, and the total cost. That's it.
So there we have it. It is as easy as that. Once your account is verified, on the invest page, tap on your US stocks, then tap on all stocks and search for the stock that you want to buy. As we've used the example we used Nvidia. Just type the name or use the ticker symbol. There are few letters that are used to refer to a stock. Instead of writing the whole name, you can just use those symbols and the stock will. Okay, and the best part about the Hisa app is that you are able to buy the shares depending on one, the number of shares that you want, or two, the amount that you want to invest. That is where the fractional shares come in. If you have your 130, you can own a piece of this company. If you have more, yeah, the playing field is open to everyone. So there's no excuse for you not to start investing in the US stocks. It is as easy as having your account, having it verified, and starting your investment journey. So once you've placed your order, remember this is a market whereby when you are buying, what you're looking for is a person that is on the other end that is willing to sell to you at that specific price. So once you place your order, wait for it to be executed. That is, wait for it to be matched to someone else who is selling. So yes, wait for the order to be executed. Now there's a question that I find most often with new investors, and the question is, how long does it take for the shares to legally belong to you? Yeah. How long does it take for the shares to legally belong to you? How long does it take for me to start selling again? How long should I wait? Well, we are about to find out. Okay, let me admit this person. Just a minute. So how long does it take? Well, there's something that we call the settlement period. Once you place your order, there's a waiting period. So the settlement period marks the official transfer of shares to the buyer's account and cash to the seller's account. So you get your shares and this person gets their money. That is the settlement period, that exchange. All right. So for US stocks, the settlement period is T plus 2. So let's say that you place an order on Monday at 11 p.m. East African time and the order is executed. How long does it take for you to start thinking about selling these shares? Well, let's say that you place on Monday and the order is executed. Will you be in a position to sell on Tuesday at 11 p.m.? No, because that will be T plus 1. So by the end, so Monday 1, Tuesday 11 p.m. no, Wednesday 11 p.m. At the end of the trading day, the shares will legally belong to you, meaning that on Thursday, once the market opens, you can sell your shares. So kindly note this. This is a question that I find mostly with the new investors. How I do when I buy these shares, when can I sell them? Well, there you have it. That is your settlement period. I hope we are learning. Okay. All right. So in case no one sells you the shares, the order will remain pending, and there's a list on the invest page whereby you are able to see all the orders that you have placed and whether they have been executed or not. Right. Okay. So next, how do you sell? So you've placed your order to buy, the order has been executed, the settlement period is over, and now you are ready to sell. How do you sell? It is as easy as buying. Okay, let's listen.
On the invest page, tap the purple section.
How to sell US stocks on the Hisa app.
On the invest page, tap the purple section. This will take you to your portfolio. Tap the stock that you want to sell, then tap sell on the new page. You will scroll down to see the order amount, the transaction charges, and how much you are set to receive. So tap sell, and once the order is executed and settled, the amount will show up on your wallet in the USD wallet. That's it.
Yes, selling is as easy as that. On the invest page, tap the purple section. That purple section will take you to your portfolio. That is where you will see all the shares that you have bought in both markets. Tap on the specific stock that you want to sell, then continue with the prompts. Once the order has been executed and the settlement period has ended, the amount will be deposited into your USD wallet. In case you missed our session on understanding Hisa wallets, don't worry, I'll share with you where you can find the recordings, but it is as easy as that. You place an order, the order is executed, the settlement period ends, the money is deposited into your USD wallet. Why? Because you sold in USD, US dollars. Okay, all right. Once the money is there, you can choose to either continue investing, or you can choose to place a withdrawal request. All right. Okay. Okay. So how long does it take for the sale to be executed? Well, this depends on how the market is performing and whether the request that you placed is the current price that people are willing to buy those shares. Now, there was a request for me to mention what pattern day trading is. Yes, PDT. So this is a restriction on this platform. Just a minute as I admit this person. Sorry. So what is PDT? So FINRA, this is the authority that regulates market players in the US. So FINRA defines a pattern day trader as someone who makes more than four trades within 5 business days. So let's say that you are a new investor.
Desliga esse computador agora! 1, 2, 3!
Apologies for that. Yeah, it happens. So we were talking about pattern day trading. Yes. This is whereby when you are a day trader, there are some restrictions on. Hey, I've lost my thought. Just a minute as I admit this person. So we were talking about pattern day trading. This is whereby you are restricted. You are restricted to making 4 day trades. This is whereby you buy, then sell, buy, then sell, buy, and sell. There's a restriction on the platform, and also this is a restriction by our partners, whereby your account will be flagged, meaning you can lose your access to the platform. So note that day trading is not allowed. You have up to 4. You can make up to 4 trades in 5 days. So note that. And in case you exceed this limit, there will be an error that will occur. You can see it on the right hand side. The notification is shown when you, the user, does 3-day trades to prevent you from going over the limit. When you go over the limit, your holdings will be liquidated. Yeah, so for day traders, there's a limit. So you will need around 25,000. For those of us who would like to become day traders, you will need to have at least 25,000 on your account. So note this. For us regular investors, note that. Please don't go over the 3-day trades limit. Okay, all right. But this error will occur in case you get to go above that limit. Whew. So this is a list of the best performing US stocks. This was compiled by our research team. Shout out to Blessing. She is the one who came up with this list of the best performing stocks so far. So number 1, we have Synergy. Yes, we have Synergy, which is in the Nasdaq Stock Exchange. which has over 6,000 percent year to date. Year to date, for those of us who are new, since the year began, how has that stock been performing? So since January, this is how this company has gained over 6,000. Number 2, we have Bright Minds. Yeah, you can see how well the stock market in the US is performing. And the best part is that you can find all of these stocks on the Hisa app, except the regional health properties. In the yes, all the others you can find them on Hisa. We'll share the list very soon. So if you are in our community, our WhatsApp community, you are in luck, because we'll be sharing this and more stocks, best performing stocks in terms of dividends and also capital appreciation. I'm happy that at this time we understand what capital appreciation is. Enough of that. Uh, so before we organized this webinar, we asked our community if they could share one piece of advice to someone just starting out in the US stock market. What would it be? Well, this is what they shared. So Candy said, if you are here to take a risk, just do it. Candy said, just go for it. Okay, so outside Kenya said that he or she is not an experienced investor, though they had something to share. So outside KE said, go for a business that any idiot can run, because sooner or later any idiot will probably run it. And this is a quote by Peter Lynch, who is a very experienced investor. So the thing with awesome, Eric can hear me. So as we wait for the awesome, thank you so much. So we were at what our community, the feedback our community gave us when we inquired what advice can they share for new investors, specifically in the US stock market. And we were going through what outside KE was saying. Outside KE said that he or she may not be an experienced investor, but what they have for us is that go for businesses that any idiot can run, because sooner or later any idiot probably will run it. Yes. So this is a quote by Peter Lynch, who is a very experienced investor, specifically in the US stock market. And what Peter was driving at is that when you buy stocks of a company, you are not only buying that individual stock, you are buying a whole business. And unlike starting your own business for stocks, these businesses will be run by other people, that is the CEOs, the directors, who will be making the most important decisions. So simply put, choose businesses, simple businesses, go for them. Thank you so much, outside KE, for the advice. We take it. The next feedback we got was from Oli Mbogwa, who said, buy wonderful businesses at fair prices, think in decades. And what Oli was driving at is that when you're buying stocks, don't just go for the name and the outlook of that company. Simply look at what you are getting by giving your money, because there's no need of you buying an overvalued stock. Yeah, there's no need. So buy wonderful businesses at fair prices. And this is why we say kindly invest in what you understand. If you understand the energy sector, go for companies in the energy sector. Why? Because when things are not going well, you will be in a position to make a decision to exit. So buy wonderful businesses at fair prices. Don't just buy for the sake of buying. This is where you need to do your research and think in decades. Yeah, if you can't hold a company for a long term, why buy it in the short term anyway? So this is for long term investors. We are not talking about our traders. That is people who buy and sell in the short term, maybe 3 months, 1 year. No, we are talking about long term investors, and that is why when you are starting investing in US stocks, one of the things that you need to do is to decide what kind of investor are you. Are you a long-term investor whereby you buy companies throughout for the next 10 years, 5 years, or even 3 years? Or are you a trader, a person who buys this week, 2 weeks from now you are selling? So decide what kind of investor you are. Are you a trader? Are you a long-term investor? Once you have chosen your strategy, you'll be in a position to make informed decisions. All right? Okay. So back to Ollie. And Ollie shared a quote from Warren Buffett. So for those of us who don't know who Warren Buffett is a very experienced investor. He has made a lot of money and made a lot of impact in the stock market. He started buying shares at the age of 11, and right now he's a millionaire through investing. Yeah, but enough about Warren Buffett. So this quote by Orly from Warren Buffett, which says, think of a business that if you buy, you would never want to sell. Back to the strategy. What kind of investor are you? Are you a long-term investor? Are you a trader? If you are a long-term investor, think of buying businesses that you'll never want to sell. All right? Okay. Thank you so much, Ollie, Outside, and Candy. The last quote is from Meso, who said, focusing on buying ETFs is so much easier than individual stocks. And this brings us to the next section of this session, which is what are ETFs? And we'll explain that. As we've said, kindly leave your questions in the comment section below, and I'll be happy to go through them once we reach the Q&A session. All right? Okay. So ETFs. You might have heard of this term or not, and it's fine. So what are ETFs? ETF stands for Exchange Traded Fund. And what is an exchange traded fund? We'll come to that. But the E stands for an ETF can be bought and sold just like a stock. So an ETF can be bought and sold just like a stock. The same way that you buy stocks on the stock market, you can buy and sell ETFs in the stock market. The T in ETF stands for traded. The same way the price of a stock can go up and down is the same way an ETF can go up and down. And F stands for fund, which is a collection of stocks or bonds. So exchange traded funds. Now we know what each letter stands for. So what is an ETF? An ETF is like a basket. Yes, an ETF is like a basket of different stocks or bonds that you can buy at once. In the previous section, we looked at buying individual stocks. You can buy Meta, you can buy Alphabet, but for ETFs, you can get to buy a whole basket. You can buy Meta, Facebook, Alphabet, Microsoft, all of them at once. Yes, for the price of one. And that is what we call an ETF, a collection, a basket of these stocks. It can be stocks, it can be bonds. So it is an easy way for you, the investor, to invest in many companies without having to pick just one stock. All right. And it is cheaper, by the way. It is cheaper. So you can, for example, you can buy an ETF on the S&P 500, the Nasdaq, and so much more. So what is an S&P 500? This might be a new term, and it's okay. We'll explain what an S&P 500 is. So an ETF is designed to track the components of a financial market index. The S&P 500 is an index. And what is an index? An index, remember when we were in school, whereby we would have a student with 400 marks, and in the same class you'll have some with less than 200 marks. Well, that average of that class can be said to be the index. The same way you can have an index in a classroom is the same way you can have an index in the market. And we'll look at a few indices in the US stock market very soon. So the aim of an ETF is to match, keyword match, and not beat the performance of this benchmark, the index. All right. So what does this mean? This means that if, for example, the S&P 500 index is giving a return of, let's say, 10% per annum, ETFs under this S&P 500 will match that. S&P 500 index giving 10%. So what you expect from the ETF is that 10%. Right? I hope we are together. If you are lost, kindly just let me know and I'll slow down. If there's a point that we have not understood, just let me know in the comment section. Alright? Okay. So I will give you four of the biggest four ETFs that you can consider looking at. And under those indices, I hope I'm not going too fast. Awesome. We don't have any questions so far. It's okay. So I'll give you 4 ETFs that you can take a look at. And yeah, under those ETFs, I'll give you an index for each one. So number 1 is the S&P 500 index. That contains 500 of the largest US companies. Yes, 500 of the largest US companies. May it be Google, Meta, Apple, all of the biggest companies are in this index. So the S&P 500 is an easy way to invest in a mix of big American companies. This index has been giving a return of 11% per year on average since 1992. So for someone who invested in this an ETF that tracks this index, they have been getting an average of 11% since 1992. So why should you consider taking a look at the S&P 500? Well, it is one of the best indices in the world. And I'll give you an example of an ETF that tracks the S&P 500. One such ETF is the SPDR S&P 500 ETF. The ticker symbol is SNPY, and which has been given 21.69% since the year started, YTD. So the first index is the S&P 500, which tracks the biggest companies in the US. An example of an ETF under the S&P 500 is the SPDR, S&P 500 ETF. Okay, the second index is the MSCI Emerging Markets. So the MSCI Emerging Markets is an index of companies operating in countries that are still growing, like China, Brazil, and India. So growing companies, you'll find them in this index. So these countries are developing fast, and companies active there have plenty of potential to grow. However, it can be riskier than investing in the US or Europe. So since 2000, this index has returned an average of 7.7%. This is 1% better than another index we will cover very soon. So why should you consider looking at the MSCI Emerging Markets Index? Well, the companies in developing countries have high growth potential. Okay? An example of an ETF under this index is the iShare MSCI Emerging Markets ETF. And the ticker symbol, that small code that you can use to search for it on the app instead of typing out that whole name, is EEM. And since the year started, this ETF has returned 13.14%. So the first two indices, S&P 500, biggest companies in the US, emerging markets, sorry about that, countries that are developing fast. And we have the iShare ETF under it. Number 3, we have the Nasdaq 100 index, which tracks US tech companies like Google, Amazon, and Facebook. So if you are interested in the tech space, this is the index for you. So technology is a fast growing part of the world economy. Everyone uses tech these days, and companies in this index are often innovation leaders. We have Google coming up with AI assistants and so much more. So by investing in the Nasdaq, you are investing in the future of tech. So since 2008, the Nasdaq index has returned 16.9% per year, compared to 14.2% by the S&P 500. So why should you consider this index? Well, tech companies have a lot of growth potential. So if you're interested in tech, this is the index to look at. Okay, an example of an ETF under the Nasdaq 100 is the Invesco QQQ Trust ETF. The ticker symbol is QQQ, which has a 22.67 YTD. The last index that we will be looking at in this session is the MSCI World. Now, MSCI World Index tracks large companies from developed countries worldwide. Unlike the S&P 500, which tracks big American companies, this index, the MSCI World Index, tracks both American and non-American companies. All right, and this index has over 1,400 companies, and this covers about 85% of the total market value in each country. So since 1987, this index has returned 8.6% annually. Yeah, So why should you consider this index, the MSCI World Index? Well, for the extra diversification, as you can also invest outside the US. So this index will give you diversification beyond the US stock market. And an example of an ETF that tracks the MSCI World Index is the iShares MSCI World ETF, and you can see the ticker symbol, which is URTH, and this ETF has returned 18.87 year to date. Right? Okay. So we have come to the Q&A section of this session. Yes, if you have any questions, this is the time to ask. Before we got disconnected, I had seen a question asking about the taxation. So for US stocks and ETFs, there is a 30% withholding tax that is charged on dividends. Note that dividends, and you will be taxed 30%, and this amount, by the time it is hitting your wallet, this amount is already deducted. So whatever you get in your wallet will be net of tax, right? Okay. Do we have any other question before we move on? Okay. Okay. No questions so far. Okay. So this is how you can contact customer support, that is Hisa customer support. You can reach out to us through 0726 999911 or email us at hello@hisa.co. We'll share the link to join our WhatsApp community, that is the WhatsApp channel, and the group, WhatsApp group. We'll share it via email, so stick around for that. Otherwise, you can scan this QR code and you'll be able to join. All right? Okay. Eric is asking, please explain on the charges. So charges, when you are placing an order for US stocks and ETFs, the platform charges only 1% of the total transaction cost. So let's say you are buying shares worth 100 shillings. So 1% of 100 shillings is what you will be charged. So you invest 100 plus 1%. Yes, that's the only charge that the company at the moment charges you, 1%. No account maintenance fee, none of that. Just 1% of the total transaction when you buy and or sell shares on the platform. Just 1%, which is lower than everyone else in this market. So just 1%. When you are withdrawing, I believe it's just 15 shillings, regardless of the amount that you are withdrawing. So yeah. Eric, is that fine? Okay, awesome. Do we have any other question before we? All right. So in case you missed our previous sessions, this is what we have been covering in the last few weeks. So week 1, we covered getting started on Hisa. This is where we differentiated what Hisa is and what Hisa is not. For example, did you know that Hisa is not a broker? This is something that most new investors get mixed up. No, Hisa is not an investor. You can get this and so much more information on this recording. The second week, we covered investing in Kenyan shares using the Hisa app, the same way that we have covered how the step-by-step process of placing an order, getting your account verified, selling, and so forth. We covered that in the Kenyan how to invest in Kenyan shares using the Hisa app session. This is a very important video that I would recommend that you watch it in case you missed that session, because we looked at the structure of the Kenyan stock market, whereby when you take a look at that video, you will understand who is in charge of making sure that I get my dividends and so much more. So make sure you watch that. The previous session, we looked at understanding the wallets, the Hisa wallets. When you deposit money, what wallet should you deposit into? For US stocks, you now know that you need to deposit into your USD wallet, but which other wallet should you deposit money into? So that recording, you'll need to watch it as well in case you missed it. Yeah, you can get all our recordings, including this one. I'll share it tomorrow on our YouTube channel. So on YouTube, just search Hisa App and you'll find the recordings there. I would advise you, in case you missed any of our sessions, please watch them, because we have covered so much in the past few weeks. And that's it from me. Do we have any last questions before we end it? Any last questions or comments? Regardless of the technical issues we faced, I believe this session was helpful. I hope that it was. Yeah. Any question before we end it? Thank you so much for joining me this evening. I apologize once again for the technical difficulties we experienced. Such is life, but we move on regardless. Thank you so much for making the time to join me this afternoon. Since we don't have any other question, we'll continue this discussion in the community section on WhatsApp. Okay, all right, stay tuned. This recording will be shared tomorrow on our YouTube channel, so feel free. Thank you so much. Have a great evening ahead.